Dive in a little bit deeper. I know we're going to mainly talk about the DAX 7 regulations, but one of the other hot topics in the industry is around the UK. They've released a set of very similar rules from my understanding, and I wanted to talk about what is going on specifically in the UK and what that looks like compared to DAX 7.
Yeah, good question. Like, how does DAX 7 work with the UK? Do they have a DAX 7 like set of rules? And the simple answer is yes, they do. And actually, the UK is one of the first countries outside of the EU member states to implement their own version of these rules. They're not called DAX 7 because that's a very specific EU term, but the UK is implementing the OECD version of DAX 7, which does have some differences to the DAX 7. Now, for those that don't know, the OECD is a global standard setting organization, and they help create models and standards for things like tax transparency so that countries around the world can implement them as consistently as possible. I think a lot of us can appreciate consistency. It helps a multinational company to comply with laws in multiple countries. So UK is implementing the OECD version of DAX 7, and they have to implement that into their domestic legislation, but they're doing this with a 1-year delay compared to the DAX 7. So DAX 7 is effective from January 1, 2023, and the UK version will be effective from January 1st, 2024, with the first reporting in January 2025. And until the UK version is effective, meaning during that 1-year delay, this means that a UK platform will have to register and report in any EU member state of their choosing. Now, this creates some awkwardness to say, well, then when the UK version is live, do I still, as a UK platform, have to register and report in an EU member state? And the answer is maybe. So DAX 7 contemplates this issue, and it has what we call a switch-off mechanism. When the UK rules are in force, and that data is being exchanged by HMRC, the UK tax authorities, over to the EU member states, then the UK platform can stop reporting that same information on sellers and transactions to the EU that they've already reported to HMRC. So it's a timing issue at first with this 1-year delay. Additionally, if the UK implements their version of these rules and don't have a comparable set of reporting data, the platform might still need to report the delta to an EU member state. So anything that doesn't get reported by HMRC, the platform might need to still go ahead and report that difference. This same conversation could apply to a Canadian platform, though the timing is different because each country implements their version of DAX 7 in a different time frame. And the same also applies to platforms in the United States. However, the United States will not have this switch-off mechanism that I mentioned, in that the United States has given no indication that they intend to implement their own version of DAX 7 and do a global data exchange back to these other countries, which means if a US platform identifies EU member state sellers or sellers with real estate in an EU member state, they will need to register and report in any EU member state of their choosing in order to report those sellers on their platform, and that might be indefinitely. And I say that in case in some future time, the US signs up to it, but most professionals understand that that won't happen anytime soon.